Today we're going to be going over three indicators that are all different but are also pretty closely related in how you use them. And so these three indicators are called DMI Stochastic, just Stochastic, and then Stochastic RSI. So they're the three I just opened up here, and we're going to be going over what exactly they are, what they tell you, and how to properly use them. So first of all, we're going to be going over the three of them individually, and I'll tell you what exactly they mean and how to properly use them. So as you can see, the three of them all have the same name, stochastic, in them. So what stochastic means is actually the dictionary definition is having a random probability distribution or pattern that may be analyzed statistically but may not be predicted precisely. What that basically tells you is depending on what indicator you're using, it just predicts the market direction. So first starting off with DMI stochastic, DMI stands for directional movement index. And so what that means is it's just predicting the directional movement of the market. It has nothing to do with the strength of the market or what the two currency pairs are, just the movement. Next, I'm going to go to Stochastic RSI. So what RSI stands for is Relative Strength Index, and what that means is it kind of predicts the strength of the market. Lastly, just stochastic, and this just predicts the overall directional movement of the market. So as you can see, these three are pretty closely related, and how you use them is also very similar too, so we'll get right into that next. Before we do that, actually, I'm going to show you the settings that I use on all three of these. They're similar in terms of their settings, but changing the settings will make a big difference on how they look and how you use them as well. So for your DMI stochastic, if you go over to the little settings button here and click that, the style you don't need to worry about. You can change that to however you want. It's just the colors and whatnot of the actual indicator, but the inputs is what's important. So your DMI length is going to want to be at 14, and your stochastic length is going to be at 3. And what this changes is you can see if I move up the stochastic length and you look at the indicator in the back there, it changes the fluidity of the graph, right? So if I move it up, it'll move less directionally, but if I move it back down to what I had at 3, it'll be very spiky, as you could say. So 14 and 3 is what you're going to want for DMI stochastic. Stochastic, I keep it at 14, 3, and 3, and this is the same in terms of settings for DMI stochastic, just different definitions for these guys. And the stochastic RSI, same thing for your K and D. RSI length, you're going to want at 6, stochastic length 14, and that's about it. So before we get into exactly how you use this, I just want to point at the side here. This isn't information that you guys necessarily need to know, but just for your guys' information, this at the side here is the Pip Bar. So as you can see, this is 0. So what it's telling you is from here to here, in between these two lines, is from 0 and 80 pips. So if the market moves up 80 pips, it would go from the red to the blue. If the market moves down 80 pips, it would go from the blue to the red. And same with this one and this one as well. So by changing these settings, you can also change the number, the space in between the bars. So you could have it from 100 to 0, which means the graph would move less, right? Or you can move it closer, so like 50 to 0, which means the graph would move more. What I have found is 80 is the perfect number for how I like to trade. It doesn't move the graph around too much, but it does give you an idea of when the market will move. So what do these lines at the top and bottom mean exactly? So on DMI stochastic, it's a blue and red line, but for the stochastic and stochastic RSI, it's just these dashed lines. So what these determine is it actually tells you when the market is oversold versus overbought, okay? So as you can see, places like here and here, when the graph crosses that blue line, as well as here and here, here, when the when the graph crosses that dashed line for stochastic and stochastic RSI, what that tells you is the market is now overbought. So say we were going from oversold to overbought, okay? So when it's crossed the red line down here, it's oversold, which means in order to buy this currency, whatever pair you're trading, is going to be relatively cheap. So when people buy it, the price is going to go up, 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 right? And then eventually it's going to get overbought. Then what happens is it'll be pretty expensive, so people are going to want to sell it, and it's going to eventually go back down. So once again, when it crosses this top line here, it's usually going from a cheap price to an expensive price, and a lot of people are buying it up, and then it eventually becomes overbought, and then people are going to start selling it, and then it starts going down again until it eventually gets oversold, like right here. So when you have a place like this where it's clearly overbought, well, obviously you're going to want to look into selling it. That being said, there is a right and wrong time to place a sell. It's not as easy as looking at, oh, it's overbought, I should sell it. What you're going to want to do is, if I can zoom in here, when you realize it is overbought, don't place your sell here or anywhere along here for that matter. What you're going to want to do is place your sell right as it's crossed into the middle market there, as you can see, okay? Reason being is, if we look at Stochastic RSI here, you can see it was overbought here. If you were to place your sell there, it could go back up and rebound again, right? So what you're going to want to do is place your sell as soon as you're entering that middle market, so you're sure that it will continue to going down at least for a little while. When you're doing your pre-market analysis, you should also keep in mind how volatile these graphs are. If they're moving up and down really fast, then you should probably place shorter trades, right? Because you don't want to place a trade if the market's moving really fast, right? You don't want to place a sell and then end up being overbought again, right? So keep in mind the volatility of the market, and that should be dependent on how long your trades are. So just a quick recap: when buying or selling, you're going to want to make sure you're placing your trade, when it's entering that middle market, not over here or anywhere here for that matter, just when it's entering back into that market. So another example would be here. So it's going up, it's overbought. Don't place your trade anywhere here, and then place your trade here, okay? And this, it could be in the overbought or oversold market for quite a while sometimes. As you can see here, I'm only on a 3-minute chart, but it was overbought for 3, 6, 9, 12, 15, 18, 21, 24, 27, 30 minutes. It was overspotted for 30 minutes. So just make sure to be patient and place your trade when it's entering that middle market. And as you can see, if you were to do that, right, like you placed it here, you would win that trade. You placed it here, you would win that trade. If you placed it here, you win that trade. If you placed it here, right, when it was oversold, and you placed a sell, you might not clear that trade, right? So you're just going to want to make sure it is in fact entering that middle market when you place your trade. So last thing I want to touch on before I end this video is just the difference between these three, because you definitely don't need to be using all three of these, okay? You should be using maximum 2 and then a different indicator, maybe a chart indicator. If you're using 2, what you can do is pair them up and only trade when they're both oversold or overbought. So for example, like it was oversold here, but it wasn't here, right? So having that double confirmation of both charts getting oversold, like this one and this one here, actually a triple confirmation if you were to use all three, although I don't recommend it, I just using 2, you can get those double confirmations on the trades. So I like using DMI Stochastic. Reasons being is it has these manual buy or sell indicators, but also, as you can see, if you just compare the 3 charts here, it moves more quickly, I find, than the other 2 charts. So right here, it's entered the oversold area. Right here, it doesn't even enter the oversold area. And right here, it takes a little longer to enter the oversold area. That being said, DMI Stochastic is a little more risky just because it moves at more of a volatile pace. So depending on the market movement, it will move up and down like more often than the other 2. So what that tells you, it may not be as accurate as the other 2 all the time. That being said, it does present more opportunities for trades anyway. So as you can see, like oversold here, oversold here, oversold here, or it's not oversold in any of those places on the other charts. Stochastic and Stochastic RSI are fairly similar. I find that Stochastic RSI is a little more volatile than just the regular Stochastic. So as you can see here, even for example, it's moving up and down a little more often than these here. And that can also be changed with the settings too. So once again, I do urge you to go into the settings of whichever one you choose to use and just change it up and tweak it to fix your trading style. But realistically, any one of these 3 would be great tools to use, especially if you're starting off. They're nice and easy indicators to use, and they're fairly clear on when to place your buy or sell. But anyways, guys, that's all I had to discuss on the topic in this video. If you guys have any questions, my email as well as my Instagram will be in the comment section below. As well, you can just leave a comment in the comment section. If you liked the video, please feel free to leave a like as well as subscribe. Thank you guys so much for watching, and have a good day.